What if emotion isn't the real reason you lose? What if your system was never designed to win? Think about it. We're sitting here blaming fear and greed for our blown accounts, telling ourselves we just need more discipline, more control. But here's the uncomfortable truth. Most traders are executing systems that have zero mathematical edge to begin with. They're playing a losing game perfectly. Today, we're going beyond the surface-level advice about controlling emotions. We're diving deep into the psychology of why emotional trading fails, how professional traders build genuine edges, and the complete mindset transformation that separates consistent winners from the endless cycle of hope and disappointment. This isn't about becoming a robot. It's about understanding why your brain fights you every step of the way, and how to work with your psychology instead of against it. Let me start with something that might shock you. Your brain has been evolving for millions of years, fine-tuned for one primary purpose: survival. Every neural pathway, every instinct, every emotional response has been shaped by the need to keep our species alive. And here's the problem. Everything about successful trading runs completely counter to these hardwired survival mechanisms. When you discover trading, especially when you see the lifestyle, the profits, the freedom that successful traders enjoy, your brain makes a powerful connection. It links trading success to survival itself. Because let's be honest, for most of us stuck in the rat race with capped salaries and limited freedom, trading represents an escape route from financial limitations. This is where the beautiful delusion begins. Those first few wins? They feel incredible. Your brain floods with chemicals that say, yes, this is it, this is how we survive and thrive. You start imagining the life you could build, the freedom you could achieve. But these early successes create a dangerous illusion of understanding. You think you've cracked the code when you've simply experienced statistical noise. Here's what happens next, and I guarantee you've lived this. You lose. And because your brain has linked trading to survival, that loss doesn't just feel bad, it feels threatening to your very existence. Your ancient problem-solving instincts kick in. You're sitting there with a mouse, staring at charts, and your brain screams, "Fix this now or we won't survive." So what do? You click. You take another trade. Not because you have a logical reason, not because your system told you to, but because your survival instincts are hijacking your decision-making process. This is exactly like a hunter who misses their first target and then jumps up firing wildly at everything in sight. In the wild, that hunter goes home empty-handed. In trading, that trader blows their account. The statistics back this up in a sobering way. If trading were just about guessing direction, up or down like a coin flip, we'd expect roughly 50% success rates. Instead, we see 90% or more of traders losing money consistently. But because we're all human, and our humanity works against us in the markets. But here's where most trading psychology advice goes wrong. It tells you to suppress emotions, to become mechanical, to ignore your feelings. That's impossible and counterproductive. Instead, we need to understand what a real edge actually looks like and how to align our psychology with systematic thinking. A true trading edge isn't about being right all the time. It's about positive expectancy, where your average gains exceed your average losses over a statistically significant sample size. It's mathematical, not emotional. It's about risk-reward ratios, position sizing, and disciplined execution of a tested system. But here's the crucial part. Your edge must align with who you are as a person. I see aggressive, fast-paced personalities trying to trade slow, patient strategies and wondering why they keep breaking their rules. I see naturally conservative people forcing themselves into high-frequency scalping and burning out within weeks. The real breakthrough comes when you understand that building an edge isn't about finding the perfect setup. It's about finding the perfect setup for you, then executing it with unwavering consistency. There are 3 paths to building a genuine edge, and each requires a different mindset approach. First is observation. This means studying market behavior over time, not just cherry-picking winning examples. You're looking for patterns that repeat, conditions that create predictable outcomes. But your brain will fight this because it wants immediate gratification, not methodical study. Second is testing. Real testing means backtesting over hundreds or thousands of scenarios, then forward testing with real money in small sizes. Your emotions will tell you that a few wins prove your system works. Your logical mind knows that's statistical nonsense. Third is reverse engineering. Look at your most profitable trades and identify what they had in common. What market conditions existed? What was your emotional state? How did you enter and exit? Then codify these patterns into rules you can follow systematically. The psychology of testing reveals something fascinating. Most traders avoid it because they're afraid their system won't work. They'd rather live in hopeful ignorance than face the possibility that their approach is fundamentally flawed. But professional traders embrace testing because they understand that knowledge, even uncomfortable knowledge, gives them power. Now, let's talk about something that might surprise you. Exits matter far more than entries for long-term profitability. Most traders obsess over finding the perfect entry point. They'll spend hours analyzing charts, waiting for that ideal setup. But then they'll exit based on fear when they see a small profit, or hold on to losses hoping for a miracle reversal. This backward approach kills accounts. Professional traders know that managing exits, profit targets, trailing stops, disciplined stop losses, can turn mediocre entries into profitable trades. They also understand that emotional exits are where most money is lost. When you're in a trade and start second-guessing your exit strategy, you're letting survival instincts override your tested system. The psychology of exits reveals our deepest fears. We exit winners too early because we're afraid of giving back profits. We hold losers too long because we're afraid of admitting we were wrong. Both responses come from linking trading outcomes to our self-worth and survival. This brings us to systemization, the process of removing emotion from execution. A proper trading system includes predefined triggers for every decision: when to enter, where to exit, how much to risk, when to stay out of the market entirely. It includes guardrails that prevent impulsive changes mid-trade. Most importantly, it includes a review process for continuous improvement. But here's what most people miss. Systemization isn't about becoming emotionless. It's about channeling your emotions productively. You can still feel excited about a good setup or disappointed about a loss. The difference is that these emotions don't drive your trading decisions. I want to share something powerful. Successful traders develop what I call detached engagement. They're fully present and focused during trading hours, but they're emotionally detached from individual outcomes. They understand that any single trade is just one data point in a larger statistical sample. This mindset shift doesn't happen overnight. It develops through consistent application of your rules, regardless of how you feel in the moment. Every time you follow your system when emotions tell you to deviate, you're rewiring your brain to trust the process over impulses. Markets are constantly evolving, and this presents both challenges and opportunities for psychological development. What worked last year might not work this year. Volatility changes, trends shift, and correlation patterns evolve. Your edge must adapt accordingly. But here's where many traders make a critical error. They abandon their system at the first sign of a drawdown, assuming it no longer works. Professional traders understand that adaptation is part of their edge. They're psychologically prepared to sit out when conditions don't favor their approach. This requires a fundamental shift in how you view trading. Instead of seeing every market session as an opportunity to make money, you start seeing it as an opportunity to execute your system properly. Some days, the best trade is no trade at all. The psychology of adaptation reveals how comfortable you are with uncertainty. Amateur traders want guarantees and consistent patterns. Professional traders embrace uncertainty as a constant and build systems that remain profitable across various market conditions. Let me tell you about the most important psychological shift you can make. Stop seeing yourself as someone who trades, and start seeing yourself as your edge embodied. Your edge isn't just a strategy you use, it becomes who you are. It's reflected in your habits, your daily routines, your approach to risk management, your emotional responses to wins and losses. You become the living expression of your systematic approach to the markets. This identity shift changes everything. When someone who trades sometimes faces a loss, they might quit for weeks or chase it with revenge trading. When someone whose identity is built around being their edge faces a loss, they review what happened, learn from it, and prepare for the next opportunity. Professional traders develop what I call process orientation instead of outcome orientation. They measure success by how well they executed their system, not by whether individual trades made money. They understand that if the process is sound, profitable outcomes become inevitable over time. This doesn't mean ignoring results. It means trusting that good process leads to good results, while obsessing over individual outcomes leads to emotional decision-making and system abandonment. The identity of a professional trader includes several key characteristics that amateur traders can develop. They have unwavering confidence in their tested system, even during drawdown periods. They understand that drawdowns are part of trading, not evidence that their system is broken. They maintain emotional neutrality toward individual outcomes. A win doesn't make them euphoric, and a loss doesn't devastate them. Both are simply data points in their ongoing statistical sample. They focus relentlessly on process improvement. After every trading session, they review their performance not just for profits and losses, but for adherence to their system and opportunities for refinement. They understand that consistency beats perfection every time. They'd rather execute a mediocre system perfectly than execute a perfect system inconsistently. Let me share some practical steps for making this transformation, because psychology without action remains just theory. First, create a daily contract with yourself. Write down your trading rules and sign it every morning before market open. Include statements like, I will only take trades that meet my criteria, I will not market order into positions, and I will set my stop loss and take profit levels before entering any trade. Keep this contract next to your keyboard as a physical reminder of your commitment to systematic trading. Second, develop the habit of being able to recall every trade you took during a session. Most struggling traders take so many impulsive trades they can't even remember what they did. Professional traders take fewer, higher quality trades and can explain the reasoning behind each one. Third, never enter a trade without predefined stop loss, take profit, and position size. Every trade should look identical in structure, even if the underlying setups vary. This removes the emotional burden of making decisions while money is at risk. Fourth, create an automatic response to losses that gets you away from your trading desk. Maybe it's doing push-ups, playing guitar for 20 minutes, or going for a walk. The goal is to break the psychological pattern of immediately trying to fix a loss with another trade. Train yourself to associate a stop-loss hit with stepping away, not clicking again. Fifth, implement a risk management plan that limits your daily losses. Maybe you risk $250 to make $500 on each trade, and after one loss, you're done for the day. This forces you to be selective with your trades and removes the possibility of catastrophic revenge trading sessions. The beauty of this approach is that it compounds over time. Each day you follow your system builds confidence in the system. Each day you resist emotional impulses strengthens your discipline. Each day you treat trading as a statistical process rather than gambling moves you closer to professional-level psychology. But remember, this isn't about perfection. Even professional traders have days when they struggle with emotions or break their rules. The difference is they view these lapses as data to learn from, not reasons to abandon their approach. Start keeping a trading journal that goes beyond just recording trades. Write about your emotional state before, during, and after trading. Note what triggers your worst decisions. Identify patterns in your behavior that lead to losses versus wins. This self-awareness becomes the foundation for lasting psychological change. The goal isn't to eliminate emotions from trading, it's to understand how your emotions affect your decision-making and build systems that account for these tendencies. Some of the best traders I know are highly emotional people who've learned to channel that intensity into systematic preparation and execution. Think of it this way, your emotions are like weather. You can't control whether it rains, but you can carry an umbrella. You can't control whether you feel fear or excitement while trading, but you can control how you respond to those feelings. The markets will always present opportunities for both profits and losses. Your job isn't to predict which you'll encounter on any given day. It's to execute your system consistently regardless of external conditions or internal emotions. Here's what separates truly successful traders from the rest. They understand that their edge exists in the space between stimulus and response. The market moves, creating a stimulus. Less experienced traders react immediately. Professional traders pause, consult their system, and respond according to their predefined rules. This pause, this space between market action and your response, is where your edge lives. It's where psychology meets strategy, where discipline meets opportunity, where your human nature either works for you or against you. Building this edge requires patience with yourself as you develop new mental habits. It requires faith in the process when results don't come immediately. It requires the humility to admit when your system needs adjustment and the wisdom to know the difference between a system that needs tweaking and emotions that need managing. Most importantly, it requires understanding that becoming a consistently profitable trader isn't about finding the holy grail strategy or eliminating all emotions. It's about building a systematic approach that acknowledges your humanity while channeling your decision-making through proven, tested processes. The transformation from emotional, reactive trading to disciplined, edge-based trading doesn't happen overnight. But every day you choose process over impulse, system over emotion, patience over urgency, you're building the psychological foundation that separates professionals from amateurs. Your current trading struggles aren't character flaws. They're human nature meeting an environment that rewards the opposite of our survival instincts. But with awareness, system, and consistent practice, you can rewire your responses to align with long-term profitability instead of short-term emotional relief. Stop trying to trade your way out of losses. Stop looking for the perfect strategy that will solve all your problems. Start building a system that works for your personality, testing it thoroughly, and executing it with the kind of discipline that turns statistical edges into consistent profits. The markets don't care about your emotions, your bills, your dreams, or your fears. They simply present opportunities for those prepared to take them systematically. Your job is to become the kind of trader who can recognize and capture these opportunities without being derailed by the psychological traps that claim so many others. Remember, emotion isn't the enemy of good trading. Undisciplined emotion is. Channel your passion into building better systems. Use your fear to develop more thorough risk management. Let your excitement fuel your commitment to process improvement rather than impulsive trade-taking. The edge you seek isn't hiding in some secret indicator or exotic strategy. It's waiting to be built through the daily practice of systematic thinking, disciplined execution, and psychological self-awareness. Every time you choose system over impulse, you're not just making a better trade, you're becoming a better trader. The question isn't whether you have what it takes to build a real edge. The question is whether you're willing to do the psychological work required to sustain it over time. Your trading account reflects not just your strategy, but your psychology. Change your psychology, and your results will follow. So what's your next move? Are you ready to stop reacting to the market and start responding with systematic precision? Are you prepared to build an edge that works not just in backtests, but in the heat of live trading when your survival instincts are screaming at you to abandon your plan? Take one concrete step today. Review your last 10 trades and identify the psychological patterns that led to your best and worst decisions. Set up that daily contract I mentioned. Implement a simple rule that forces you to step away after any loss. Start building the systematic foundation that will support your long-term success. Your journey from emotional trading to professional-level psychology starts with a single decision: to treat trading as a skill that can be developed systematically rather than a game of chance where emotions determine outcomes. The markets will be here tomorrow, next week, next year. The question is, what kind of trader will you be when the next opportunity presents itself? Will you react from emotion or respond from system? Will you trade your feelings or execute your edge? The choice is yours, and it's available to you right now. Stop trading your emotions. Start building your edge. Your future profitable self is waiting for you to make the psychological shift that changes everything. What emotional pattern do you struggle with most, and what step will you take today to build your systematic edge? Share your thoughts in the comments. Your awareness and commitment to change might be exactly what another struggling trader needs to hear to begin their own transformation.